Options investing is often misunderstood. Many people hear the word options and immediately think speculation, gambling, unnecessary risk. But when options are approached with disciplined mathematical thinking, position sizing, and downside protection, they can become a structured way to generate income and improve portfolio outcomes. Today, we are going to talk about options, structured income, investor education, risk management, and how technology may help investment firms communicate complex strategies more clearly. So welcome to another edition of the Smart Office Podcast. I'm your host, Hippolyte Asa. I'm an AI implementation engineer. I help businesses use practical AI systems to improve operations, client experience, and growth. Today, I'm excited to welcome Nikhil Jaisinghani of Titan Strategic Income Fund. Nikhil is an options investor and investment professional whose work focuses on structured income, risk management, and helping investors understand how options can be used thoughtfully rather than speculatively. Nikhil, welcome to the Smart Office Podcast.
Thank you, Hippolyte. I appreciate the offer to be on the show.
Nikhil, I'm excited to have you. We're going to have an exciting conversation today. What stood out to me? So, Nikhil, before we get into the options and structured income, can you share your story? How did your journey lead you to Titan Strategic Income Fund?
That's a great question. It was a little bit of roundabout path. I graduated college with the intention of going in to get a PhD in physics. And my final year of college, I was walking across a bridge and just had a revelation about what it was I was doing or pursuing, and realized I just didn't want it. And so I didn't know what I did want to do. So I ended up being a software developer for a few years, realized that wasn't it.
Okay.
I joined the Peace Corps, went to Nepal. I lived in a village that was a 2-day walk from the nearest road without electricity and running water. And I taught math to kids that probably didn't need to know math, but that was my job for 2 years. And it was amazing. And I came back from that thinking, I really need to make sure that there's something in my day that when I wake up, I'm excited for what I'm going to see or do that day. And at first I thought that was just living in different places,
Right.
experiencing culture shock. I ended up joining the USAID Foreign Service and went to Nigeria and lived in Abuja for 4 years and was working on public-private partnerships. And then before I was supposed to leave and head off to another assignment, I ended up quitting because I wanted to work on oil and gas flare reduction in Nigeria through a social enterprise. So I became a social entrepreneur. It didn't work so well for me in Nigeria, but moved to India and started a social enterprise there and spent about 10 years building microgrids. I designed a really low-cost microgrid that got recognition from a variety of sources, including National Geographic and MIT. And we were deploying these microgrids all across North India. We're serving about 150,000 people by the point I left India. And it just became a challenging situation with our investors and with the challenges of doing rural collections and rural labor force management. And so at one point, I realized I needed to step away and again, was in a position where I didn't know what I was going to do, but I knew what I wasn't going to do. And I ran into someone who ended up being, a current colleague and business partner working in finance as managing endowments and foundations, managing the investment side of endowments and foundations. And while there, I decided to look to see how options might be able to help what we were doing there. And about 8 years ago, I started diving deep into options and realized there was an opportunity to take a completely different approach to using options to generate income in a very stable way for family offices, individual retirement accounts, etc. And so that was what led to the opening of Titan Strategic Income Fund last year. We're doing great, having a great year. Really excited about where we're going. But more than anything, I just want to share what I've learned about options with those who are listening and interested here, because I do think, as you said, there's a lot of misconceptions.
Wow, that's quite a story. So when someone hears the name Titan strategic income. What do you want them to understand about the fund's philosophy?
That is a fantastic question. No one's asked me that before, but I really like that question. The idea with Titan was just the concept of strength and security, and that security more important because we are trying to create very stable income flows through options. The structured income is just simply the fact that we're using options to generate income. It's not a dividend strategy. It's not a interest on cash strategy or yield strategy, but it is using premiums off of options. So it's a little bit different, but trying to get to that same objective of regular repeatable income.
So let's break down what options is for. Many people who are listening, they might not have heard about options. Can you clarify any misconception what options are and how it makes money?
Yeah. So an option is simply a contract, and there's two sides of the contract. There's two types of options. There's puts, which are the right to sell, and calls, which are the right to buy. And there's a few different variables, but they're fairly standard contracts with really only 4 variables in them, whether it's a put or a call, what the underlying stock is, what the price that you have the right to buy or sell at is, and when the contract expires. And those are the only 4 variables. Aside from that, it is every option contract is exactly the same. The person who's buying that option is buying the right, as I said, to either buy or sell. But the person who's on the other side is receiving income now because they're selling this option or selling this obligation in exchange for a potential future obligation to the buyer. If you position it well, and if you know how to evaluate options, if you understand what makes them tick, essentially, and why people are buying them, you can find options that are structured to make money. And that is what we do. We look for the ones that are structured to make money and have really nice risk return characteristics that we think are unparalleled in the stock market. I think what a lot of people, when they first get into options, what they hear is a way to gain exposure to a forecast. So I think the S&P is going to go up, over the next 6 months. So I could either buy an S&P tracking ETF, but I could also buy a call option, the right to buy. I want to be able to buy this S&P at some price that's below the future price so that I can then sell it and make money, right? So that's what I want to be able to do. And so I think a lot of people look at these options as ways of gaining exposure to some forecast they have. And I understand structurally that's what they look like. In fact, that's structurally that they are that. But the truth is most of us aren't any better forecasters than the rest of the market. And so what happens is we end up buying an option, and either the option is overpriced and we pay too much for it and end up losing money, or maybe we break even, or sometimes we win money, sometimes we lose, but over the long term, we're just not making money on it. And that is, I think, the way most people, when they're introduced to options and when they begin trading options, they're buyers of options. And as a result, I don't think they have a very good experience with them. They come away from a few years a few years of trading and just think they're giving up. And the reason, as I said earlier, is that these options aren't structured to make money really when you're buying them. If you want a tailwind position, it's selling puts. And the reason that is because people are buying puts, they're buying protection for their portfolio. If they have a stock that's trading at $100, they want to make sure they can always sell it for at least $90. So they buy a put, and that put allows them to sell it no matter how low the price of that stock goes. They can always sell it at the price that's guaranteed in that contract. And that gives them downside protection. It gives them a little piece of security. They go to bed at night thinking, I'm not going to worry about my stocks. Whatever happens tomorrow morning, I'm fine. And that's great. It's a wonderful product for them. But the person who's buying it is buying insurance. And we all know insurance is priced to lose money over the long term. You aggregate insurance is sold by for-profit commercial enterprises. And so insurance is priced to lose money for the buyer. And so that's why we take the other position, and we do it. But there's more to it to identify the best opportunities, but essentially that's where the philosophy and the strategy comes from. And so I think it's for a lot of people, it's just reorienting how they look at options and how they look at integrating them into their portfolio. That is kind of the new lesson for a lot of people.
Right.
Right.
So tell
So
us about
tell us about
Titan
Titan
Strategic
Strategic
Income
Income
Fund.
Fund.
Maybe what do
Maybe
you
what do
guys
you
do?
guys
What
do?
do you
What
do?
do you do?
Maybe those who
Maybe
are
those who are
listening,
listening,
those who
those
may
who may
want
want
your
your
services or
services or
advice or
advice
want to
or want to
consult with
consult
you,
with you,
a little bit
a little
about
bit about
everything you guys
everything
do.
you guys do.
Sure. Yeah, so we are a fund, accept money investments from LPs who are accredited investors. What we do is we take that money. The money sits actually in cash in the account, generating interest. But what we do is that we use that cash as collateral to sell puts. And so every day we look at a few hundred stocks and the puts on those stocks to identify mispricing in the puts. And so we're looking fundamentally at value stocks. So these are stocks that have already been beaten down. They're trading at low PE ratios. And as a result of that, we believe the tendency for them to decline more is probably less so than the average stock. And that gives us a little bit of protection there. But then we sell puts that would require the stock to lose even more money over a fairly short period of time before that obligation becomes a money losing obligation for us. So we sell puts every day, looking at this collection of a few hundred stocks, as I said, and we've got a metric for comparing the price of puts against different stocks with different volatilities and different expiration dates to identify which ones are the most mispriced and which ones are adding the most value to our portfolio. And then we trade those. On behalf of our clients. The goal is to achieve a 1 to 1.25% a month on average. And we're doing great. We're above that this year. Had a nice even March when the Iran war began
Right.
and equities fell off, sold off a bit. We had a very nice positive month, and we're continuing that momentum throughout this quarter as well.
Wow. It looks like no
Like
matter
no
how
matter
life
how
is,
life is,
there are
there
always
are
people
always
who
people who
strategically make
strategically
money
make
out
money
of
out
the
of the
system. You just
system. You
have to be
just have to be
strategic
strategic
how you
how you
place
place
yourself.
yourself. So,
For what kind
what
of
kind of
clients
clients
do you
do
seek?
you
Like,
seek?
if
Like,
somebody
if somebody
wants your
wants to
advice, what
advise,
a
what
sort
a
of
sort of
clients,
clients,
and why
and
should they
why should they
trust you
trust you?
Well,
to do?
the first thing in terms of reaching out, I just love talking options. So if someone likes to talk options, wants to learn about options, I'm game for a phone call anytime. So that's open to anybody. In terms of investment, I think the strategy that we have for tax reasons is really best for family offices that have a cash allocation that is earning 3-4% right now, and they see that as a drag on their portfolio's return, so they want a bit more from their cash allocation. Because if we can take their cash allocation and generate a double digit return on that, then it's keeping pace with the rest of their portfolio, and then keeping cash isn't something you have to be hesitant about. But family offices do need cash. They have payouts that they oftentimes make for family members for regular expenses, and so they need that cash allocation just in case the market has a disruption. And so we like to be that cash management system for them. And then for individuals in retirement account and IRA, that you're looking for stable long-term growth. You don't want to be surprised when the S&P is down 20% and you're opening up your account and you're thinking that's my retirement. That's, you start recalculating what date you're going to retire at. If we can replace that burden from individuals by creating a less volatile investment structure that still has very attractive long-term returns, I think that's going to be really attractive to a lot of people.
Wow, that's good. Wow. So, Nikhil, I mean, that's very
That's very
inspiring. A lot
inspiring.
of
A lot
people
of
are not
people are
aware
not
of what
aware
you
of what
just
you
said,
just said.
and hopefully the
Hopefully, the
listeners are going
listeners
to
are
take
going to take
advantage of
advantage
this.
of this.
In this
In this
industry,
industry,
how is the
how is the
industry?
industry?
Can you
Can you
find
find
people deal with
people deal with
options
options
in
in
our
our
daily?
daily?
I mean, the
I mean,
common
the
banks,
common
can they
banks,
work
can
with
they
you? And
work with
how,
you? And
if
how,
somebody
if
wants to
somebody
get in
wants to get in
contact with
contact
or reach
or
out to
reach out to
people who
people
are in
who are
this
in this
options
options
trading
trading
business, or
business, or
how,
how
what's the
what's the
process?
process?
Yeah, so with a fund like ours, it's simply a question of reaching out through email on the website and starting a discussion. It's really important from a fund's perspective to make sure that a client coming in has a really strong understanding of what they're investing in, because the last thing you want is 3, 6, 9 months or even 2 years down the road, something happens and someone's like, well, the S&P's up 35%, and you're only up 16%. What happened? And having to explain that that's not, we're not keeping pace with the S&P in those blockbuster years. you don't want to have those conversations after the fact, because then you have an angry investor. So you really want to make sure people understand what they're getting into from the beginning. So that education, that dialogue at the beginning is really important. So I think reaching out and having that discussion with a fund is critical. If you want to take on options yourself, usually it's just trading permissions in your brokerage account. So I would recommend spending a lot of time reading about options. I actually have an ebook on options that is available through our website. It's free. So,
Okay.
you request it, we'll send it out. It's not a moneymaker for us, but it's a part of education for us. And so that has a pretty core section on what options are, just to make sure that someone understands it before they start trading. But once they do, you can trade them just like you could trade stocks on your brokerage account.
Oh, that's good. So, Nikhil, with everything titled strategic income is building maybe around options, education, just like you said, structured income, investor communication. What are you most focused on improving right now? Let's say, what's the priority?
Yeah, so this year, part of that priority has been on technology. We, with I mean, it's not just an AI story, but technology broadly can help us take manual processes and automate them. So that's been a big part of the first few months this year. In addition to that, it's a lot of research. I've been looking at time decay of options. So, when an option is a month, 2 months from expiration, how does the price decline as it approaches expiration? And there's there's some misconceptions about what that time decay looks like. And it's really important, if you're a trader, to understand not just what the theory says, but what the actual reality is of the decay of that price. And so that's been a point of research for me. It will integrate into some additional elements to the strategy over time. It's also going to result in, hopefully, a paper to be published in the coming year or so. But the more I can spend time on that, the more that helps us be better traders on behalf of our clients.
Right. So a lot of people, just like you say, as a follow-up, is a lot of emphasis on technology now. And a lot of industries are trying to catch up or adapt to the changing technology. If you could remove one repetitive or low-level, low-leverage task from your team's weekly workload, what would that be?
Yeah, I mean, coming into this year, it was the process, that we look at option prices right just after opening at 9:35, and not having to be on the computer watching the tickers move and tracking individual positions to make trades, automating that, because I had been doing it for a few years. I had been automating elements of it, every year, with the aim of getting to the point where I had software that was doing the full process for me. And so that is exactly where we got last month. We got to the point where the fund is being the trading of the fund is fully automated. So what that means is that my day isn't spent glued to my monitor from a specific time during the day. I can spend that time doing other things that are helping the fund.
Right.
Part of that is marketing, but a lot of that is just research and really spending time digging deep into new ideas and new strategies that could help. We're looking at further downside protection. As I mentioned, we already have downside protection in every put we sell now, but we're trying to figure out the most cost-effective way to protect against larger down declines in the market as well. So these are all things that just, they take time, and they need me to be focused, and doing the mundane process of entering a trade in is just not the best use of my time. So technology has helped us with that. Moving forward, I think it's going to help us even with marketing, reaching out to clients, identifying clients. There's nothing that can beat this kind of one-on-one that we're having right now.
Right.
But at least getting to the point where that one-on-one is set up, there's better ways to do it than what we've seen so far. And I think we're seeing some new products come out in the market that will help us do that.
Oh, that's great. So if you could free up maybe some time, what would free up maybe your team's focus Yeah, team. Let me rephrase the question. Let's say you want to free up your team from some manual tasks. What would that be right now? Do you have anything in mind, like if you could free some manual tasks so that they could focus on the specialized tasks they do?
Yeah, it's right now it's outreach.
Okay.
For the sake of our existing LPs, being able to spread kind of the fixed cost of the fund around to more LPs requires outreach and getting in front of more people. And that's can be a very time intensive task. Identifying who to reach out, figuring out how to contact them, the best way to reach out to them. That takes a lot of time, and it's time when it's spent on that. It means time not spent on research and innovations and improvements for the strategy, which has a draw then on future returns of the fund. So that would be the thing right now. I think would be the biggest time saver for us would be outreach.
So one of my last questions: what for an investor listening is curious about options but cautious? What first steps should they take?
The first step I would take is to really spend some time understanding what options are. So you can go to the Titan Strategic Income Fund website and request our ebook. I'll just drop it in an email, send it to you. No questions asked. You could go through that. There are plenty of other options, books that you could buy on Amazon. You could scour the web. But I think understanding options and where their headwinds and where their tailwinds are is the most important thing, because as soon as you start trading, you need to know whether what you're trading is likely to make money, likely to lose money, or just kind of a kind of 50-50 gamble. So I would say do that. By the time most of us enter our 20s and 30s, we understand companies, we understand stocks, right? These are ideas. If the company is doing great, the stock price will go up. Want to identify companies that are going to do great, that are going to grow. That's the basics, a very, very elementary explanation of it, but I think a lot of us understand it. But when you explain or talk about options, it is completely new, novel. It's a different world. And so if you start trading in a world that you don't understand, it's very likely you'll lose money. And when you lose money on something like that, you start to believe that's what happens when you trade in options. You lose money. And that's the thing I think I want to avoid people coming away with, is this impression that they're going to lose, that trading in options is a money losing strategy, because it really doesn't have to be. It can be a very, very attractive way to invest, but it has to be done from a point of understanding. So I would just say, before you start trading, spend time really digging deep and trying to understand how those options work and how to use them to make money.
Right. Give me a background. What does it take for someone to become an option trader? I mean, from what you're saying, you're just creating a whole new career path for a lot of people that are going to be listening. Like, I didn't know there's something like options trading. Probably just going to be an options trader. So what does it take to become an options trader? Give me your background. That your background is software developer, teacher, and everything. So what kind of advice would you give somebody who wants?
Yeah, I can just say that for me to get to the point where I am at now, I've been studying options for about 8 years. I was a math major and physics major in college, so I have that inclination to understand things through models and quantitative measurements. So I think that's it. I think those are two important skills to have when you're measuring or coming up with an options strategy, is understanding the quantitative side, because there is a qualitative element where you can look at the underlying company and get a sense of where it's going to go and whether it's undervalued, overvalued. But I really do believe that the options is more quantitative than stock trading is. And so I do think it's important to have that skill set and to do it really well. We're active traders. As I said, we sell puts every day. So to do it really well, having time each day to do it is also important. So you said that it's going to open up career paths. That means that this is what people do for a living. If you have that time each day allocated to doing this and understanding it and actually executing it, that is going to be great. For those who have another job and are trying to do it, the results will be less spectacular. So just knowing that, getting in, that if you are going to trade on your own and don't have the same time to put into it, you can't expect the same results. And I think the last thing is just how important technology is and how important it is for us to be able to use it to our advantage, because there are in terms of learning, if you were starting anew and wanted to learn about options, being able to access resources that LLMs can find for you faster, being able to write code that can execute some of these processes for you on a daily basis, helping you identify the right trades to make. That software and those software skills that with Claude Code and other tools like it, we no longer need to be the ones that are writing the code, but we still need to understand what it is we want the code to do. And I think it's that logical thinking of the steps that we have to be able to advise the LLM on that is really important, because you've got to get those steps really clear and really correct in order to generate that product that's going to work for you.
Sounds good. So where can people learn about you, request the LP overview, or explore Titan's education material? I know you mentioned the website. You want to just emphasize on that again?
TitanStrategicIncome.com is the website, so you can pop on there and access an overview of the fund or that ebook I mentioned, and reach out to me at Nikhil, Nikhil at TitanStrategicIncome.com. And if all you want to do is have a discussion on options, I'm happy to do it. So happy to spend half an hour, 20 minutes just talking through ideas. I love to do it, and education is a big part of what I see my job as. So I'm more than happy to spend time talking about what I've learned and what other people might need to know before they get into it.
Well, Nikki, thank you for joining me on the Smart Office podcast. I really appreciate your insights on options, structured income, education, management. It was a pleasure talking to you.
It was great talking to you, Hippolyte. I appreciate the chance.
Thank you.